Hi there, it is time for our weekly market update. You may have seen some headlines recently about the new federal housing bill called the 21st Century Road to Housing Act. The big picture on this is really quite simple. This bill is focused on helping create more housing supply over time. That includes the speeding up of certain construction reviews, encouraging more housing options like townhome and duplexes, limiting how many single family homes the largest institutional investors can buy, and reducing some ties called to the manufactured homes. Now, that does not mean that home prices are going to change overnight. Housing supply does take time, but it does show that affordability and inventory are being taken seriously, and that is very important. I've been getting a lot of questions over the last few days in regards to the Iran conflict and its effect on mortgage rates. The situation has become more volatile again after a period of attempted diplomacy. Yes, the conflict in Iran can affect mortgage rates, but probably not in the way that most people think. When there is an uncertainty around the world, investors often move their money into safer investments like U.S. Treasury bonds. Now, that can actually help mortgage rates improve. However, Iran is one of the largest oil producing countries in the world. If the conflict causes oil prices to rise significantly, it can increase inflation. Higher inflation usually causes mortgage rates to move higher because investors demand better returns. So, right now, the market is balancing between two forces. The good news is that we're not seeing widespread panic in the financial markets. Investors are watching the situation very closely, but they're also paying attention to inflation and overall U.S. economy. For buyers, sellers, and even investors, this is a good reminder that the market is still moving and that the people who are prepared, educated, and working with the right team are going to be in the best position. A small change in mortgage rates can happen in either direction from one day to the next, and trying to time the market perfectly rarely works. The best strategy is to have a plan. That's what I help my clients do every day. Watch the market, understand what's happening, and lock at the right time based on their individual situation instead of the latest news headline. If I can help you or anyone that you know with a mortgage loan, please reach out. I'm always available.